Hello everyone, welcome to my YouTube channel Insurance Basics. Actually, there are many types of insurance basics, and our topic is about insurance basics. First of all, we discuss about auto insurance basics. Auto insurance protects against financial loss in the event of an accident. It is a contract between the policyholder and the insurance company. The policyholder agrees to pay the premium and the insurance company agrees to pay loss as defined in the policy. Auto insurance provides property, liability, and medical coverage. Property coverage pays for damage to or theft of the car. Liability coverage pays for the policyholder's legal responsibility to other for bodily injury or property damage. Medical coverage pays for the cost of treating injuries, rehabilitation, and sometimes lost wages and funeral expenses. Most states require drivers to have auto liability insurance before they can legally drive a car. Liability insurance pays the car other drivers' medical, car repair, and other costs when the policyholder is at fault in an auto accident. All states have laws that set the minimum amount of insurance or other financial security drivers have to pay for the harm caused by their negligence behind the wheel if an accident occurs. Most auto policies are for 6 months to a year. A basic auto insurance policy is comprised of 6 different kinds of coverage, each of which is priced separately. See below. Number 1. Bodily injury liability. Number 1. Bodily injury liability. This coverage applies to injuries that the policyholder and family member listed on the policy cause to someone else. These individuals are also covered when driving other people's car with permission, as motorists in serious accidents may be sued for large amount. Drivers can option to buy more than the states require minimum to protect personal assets such as home and savings. Number 2. Medical payments or personal injury protection. This coverage pays for the treatment of injuries to the driver and the passenger of the policyholder's car. At its broadest, PIP can cover medical payments, lost wages, and the cost of replacing services normally performed by someone injured in an auto accident. It may also cover funeral costs. Number 3. Property damage liability. This coverage pays for damage policyholder or someone driving the car with their permission may cause to someone else's property. Usually this means damage to someone else's car, but it also includes damage to lamp posts, telephone poles, fences, buildings, or other structure hit in an accident. Number 4. Collision. This coverage pays for damage to the policyholder's car resulting from a collision with other car, an object, or as a result of flipping over. It also covers damage caused by fatalities. Collision coverage is generally sold with a deductible of $25 to $1,000. The higher the the deductible, the lower the premium. Even if policyholders are at fault of an car collision coverage will reimburse them for the cost of repairing the car minus the deductible. If the policyholder is not at fault, the insurance company may try to cover the amount it paid from the other driver's insurance company, a process known as subrogation. If the company is successful, policyholder will also be reimbursed for the deductible. Number 5. Comprehensive. This coverage reimburses for loss due to theft or damage caused by something other than a collision with another car or object, such as fire, falling objects, missiles, explosions, earthquakes, windstorm, hail, flood, vandalism, and riots, or contact with animals such as bird or deer. Comprehensive insurance is usually sold with a $100 to $300 deductible, though policyholder may option for a higher deductible such as a way of lowering their premium. Comprehensive insurance may also reimburse the policyholder if a windshield is cracked or shattered. Some companies offer separate glass coverage with or without a deductible. States do not require the purchase of collision or comprehensive coverage, but lenders may insist borrowers carry it until a car loan is paid off. It may also be a requirement of some dealerships if a car is leased. Number 6. Uninsured and underinsured motorist coverage. Uninsured motorist coverage will reimburse the policyholder, a member of a family or a designated driver if one of them is hit by an uninsured or a hit and run driver. Underinsured motorist coverage comes into play when an at-fault driver has insufficient insurance to pay for the other driver's total loss. This coverage will also protect a policyholder who is hit while a pedestrian. Secondly, homeowners insurance basic. Homeowners insurance provide financial protects against disasters. It is a package policy, which means that it covers both damage to property and liability or legal responsibility for any injury and property damage policyholder or their family caused to other people. This includes damage caused by household pets. Damage caused by most disaster is covered, but there are exceptions. Standard homeowners policies do not cover flooding, earthquakes, or poor maintenance. Flood coverage, however, is available in the form of a separate policy both from the National Flood Insurance Program and from a few provide insurance. Earthquake coverage is available either in the form of endorsement or as a separate policy. Most maintenance related programs are the homeowner's responsibility. A standard homeowner policy includes four essential types of coverage. They include number one, coverage for the structure of the home. This part of policy pays to repair or rebuild a home if it is damaged or destroyed by fire, hurricane, hail, lightning, or other disaster listed in the policy. It will not pay for damage caused by flood, earthquake, or routine wear and tear. Most standard policies are also covered structures that are not attached to a house such as garage, tool shed or gazebo. Generally, these structures are covered for about 10% of the total amount of insurance on the structure of the home. Number two, coverage for personal belongings. Furniture, clothes, sports equipment, and other personal items are covered if they are stolen or destroyed by fire, hurricane, or other insured disaster. Most companies provide coverage for 50 to 70% of the amount of insurance on the structure of a home. This part of policy includes off-premises coverage. This means that belongings are covered anywhere in the world unless the policyholder has decided against off-premises coverage. Expensive items like jewelry, furs, and silverware are covered, but there are usually dollar limits if they are stolen. To ensure these items to their full value, individuals can purchase a special personal property endorsement or floater and insure the item for its appraised value. Trees, plants, and shrubs are also covered under standard homeowners insurance, generally up to about $500 per item. Perils covered are theft, fire, lightning, explosion, vandalism, riot, and even falling aircraft. They are covered for damage. They are not covered by damage by wind or disease. Number three, liability protection. Liability coverage protects against the cost of lawsuits for bodily injury or property damage that policyholder or family member cause to other people. It also pays for damage caused by pets. The liability portion of the policy pays for both the cost of defending and the policyholder in court and any court awards up to the limit of the policy. Coverage is not just in the home but extend to anywhere in the world. Liability limits generally start as about 1 lakh dollar. However, experts recommended that homeowners purchase at least 3 lakh dollar worth of protection. An umbrella or exclusive liability policy which provide broader coverage, including claims for libel and slander, as well as higher liability limits can be added to the policy. Generally, umbrella policy cost between $200 to $350 for $1 million of additional additional liability protection. Homeover policies are provide no-fault medical coverage. In the event that someone is injured in a policyholder's home, the injured person can simply submit medical bills to the policyholder's insurance company. In this way, expenses are paid without a liability claim being filed. This coverage, however, does not pay the medical bills for the policyholder's own family or pets. Number 4. Additional living expenses. This pays the additional cost of living away from home if an house is inhabitable due to damage from a fire, storm, or other insured disaster. It covers hotel bills, restaurant meal, and other extra living expenses incurred while the home is being rebuilt. Coverage for additional living expenses differs from company to company. Many policies provide coverage for about 20% of the insurance on a house. This the coverage can be increased for an additional premium. Some companies sell a policy that provides an unlimited amount of loss of use coverage but for limited amount of time. Additional living expenses coverage also reimburses homeowners who rent out part of their part home for the rent that would have been collected from a tenant if the home had been destroyed. I hope this video is helpful for you. I see you again in the next video. Bye.